What we'll do is after I present here, when I get things going here, I'll mute myself and then hopefully things are going to be okay after that. But can everybody on the line though hear me okay other than Dean? Yeah, perfect. Okay. Just bear with me here a second. I'm just trying to, oh, no, give me 1 second here. Can you guys see a presentation or?
Yep.
Perfect. Okay. So yeah, so like I said, my name's Andrew Thomas, and I won't go into my little life story, I guess. But I guess what I didn't touch on is just what I do for clients. So I have a portfolio of farm clients, like I said, throughout Saskatchewan. I'm just one of many, across the prairies. We have RBC. We really do specialize. We have many specialized agriculture account managers or relationship managers now we're called. And so what we do, we really are seen as a trusted advisor in terms of being there for our clients. Yes, of course, there's a transactional piece of all the banking solutions you need and financing and leases and loans, things like that. But what many of us try and do more than that is we really try and dig deep into the farm business itself. With that, it's figuring it's understanding the short-term and medium-term goals, right? It's also looking at the mitigating risk and figuring out succession plan and a contingency plan and all these kind of things. I guess over and above, we kind of look at it from a holistic approach, and yeah, I truly love my job because, like I said, I said earlier, I as a farm guy myself, nothing better than to sit down and to work with farm businesses and to help them succeed. And from RBC lens, we have many really cool solutions, and so yeah, it makes things pretty easy on my end when it comes to working with farm clients. So um, with that, I just thought I'd start the presentation just with a few facts about RBC. I mean, many of us on the call, I'm sure, are aware of the Royal Bank, but I just found this interesting here just a few days ago. There was a capital markets email that came out, and I just thought I would kind of share a few points. So we've been around since 1864. We've been an ag lender for the best part of or over 150 years. We've never gone out of ag lending. We've always been in when other banks kind of were in and out there during the last few decades. We're the largest bank in Canada, the seventh largest bank in North America, and the 10th largest bank in the world. So, I thought that was interesting. I'll be honest, till this week, I didn't realize the North America stat and the world stat. So, because I'm aware of all the banks out there in the world, but yeah, from a market standpoint, we are one of the largest, the 10th largest bank in the world. So RBC is among a small group of highly rated global banks recognized for its financial strength, market leadership, and philanthropic work. And in 2024, or actually a year ago, Easter here, we purchased HSBC Canada, and that was one, I think, if I'm not mistaken, that was one of the largest banking acquisitions in Canadian banking history. And so it wasn't easy work, but from what I understand, I think for the most part, clients were pretty satisfied with their switch over from HSBC Canada to RBC, and with that came a lot of technology pieces. Like HSBC Canada had very good online banking platforms and things like that, and from an international banking standpoint too, they were pretty good. So yeah, it's been pretty exciting the last year. And I just thought I'd mention our mission statement too, which is helping clients thrive and communities prosper. Clients thriving, that's not new news, I should say. But I mean, communities prosper. We strongly believe that our clients can't thrive without our communities prospering. So we really make it an effort to, whether it's through our grant system and volunteering and things like that we do, and especially in rural Saskatchewan, rural Canada, like we're really championing that, to make sure that there's we support daycares and playgrounds and hockey rinks and things like that. So I just thought I'd mention a few things about RBC from that lens. So when Dean and I chatted here a month or two ago, and he asked me to come on the call here. So we talked about, current trends, and I mean, there's all kinds of things going on in the industry right now, obviously with tariffs and everything else, and I'll get to that in a bit, and I'm sure Tyler will mention that in his presentation as well coming up. But I thought I would touch on a few current farm financial trends that I'm seeing, and I guess from a disclaimer standpoint, I mentioned my territory, so I mean, I understand that in some areas numbers probably look differently in other parts of the prairies, but from I guess some of these, my take is I guess from what I'm seeing in Saskatchewan. So first of all, I guess decrease in working capital since 2022. So for many farms, at least what I saw, 2022 was a unbelievable year with great grain, the highest, record high grain prices, great yields, and so a lot of cash was earned in those years. And so I say cash is king, and we've all heard of that, but I think again from an RBC lens on this, like we're a cash flow lender, so for us, when I'm looking at financial analysis, cash truly is king because we understand that profitability goes up and down, but it's the cash, the working capital that's going to get a farm through some tougher times. Um, so what I did see, in 2022 and into 23 and some of 2020, 2024, many farms paid for capital expenditures with using cash. So, whether that was equipment upgrades, some land purchases, things like that. So, it made sense because, I mean, a lot of guys had cash in the bank to burn, and also interest rates were high. So it made sense to use that cash then, right? Instead of taking on high interest rates. So one key measure that we use at RBC is we measure the farm's working capital as a percentage of their total costs, or what we call total cash costs. Um, so basically from a total cash cost, that's the total expenses to put the crop in a single year. So I guess basically it's all the expenses that are listed on your income statement, less depreciation, because we don't treat that as a true cash expense. But we kind of total up that, and once we figure out that number, we then work out your working capital, which essentially is your current assets or your inventory, if you will, less your current liabilities. So it's how I always approach it is if you're a December 31st year end, and you sell all your grain, put that money in the bank on January 1st and pay off your short-term lines of credit, it's the cash you'd have, working capital is the cash you'd have left over going into the following year. So that's a key measure, like I said. And when we measure it as a percentage of your expenses, many farms had, over 100% in 2023, from what I saw. But now from the 2024 numbers I've seen here, I've seen a few statements here coming through recently, and that number coming into 2025 has dropped significantly to less than 50%. So, I mean, for guys that are at 100%, you're basically a year ahead. You have enough cash, basically a working capital, to cover all of your next year's expenses. Obviously 50%, you're half of that. So that means you're going to be dipping into more lines of credit and, maybe a cash advance, things like that. So the trend is going down. I mean, that's just the way it's been. It'll be interesting to see what happens at the end of this year here in 2025. But the second point there is that profitability has tightened since 2022. So much like working capital, the trend has been down. Some cases, the farm profits have decreased by 50% in each of the last couple of years, So that's been kind of across the board. Doesn't really matter where you're located. I've been seeing that, which um, for us right now, we look at everything on a 3 to 5 year average. So with that, we understand that, some farms are going to have you're going to have some losses in there, and so we don't look at it on a 1 year average. So, but yeah, right now we're okay. But I mean, if we go through a number of these years where profitability is fairly lean, or sorry, fairly tight, then some farms could run into some debt servicing issues potentially here. Many farms saw consistent production, for what I can gather. Like, I think a lot of guys have got their production pretty well set in terms of they're able to grow fairly decent yields. I mean, obviously weather permitted, but for the most part, the yield are fairly consistent. But it's the significant decrease in commodity prices that have obviously directly affected the profitability of farms in the last couple of years. 2024, from what I've seen so far, has seen a slight drop in expenses, or preferably production expenses. So your fertilizer, your chemical, your seed, your land rent, your fuel, but not enough to offset the revenue drop. So where that comes in is that gross margin, your revenue or sales less your production expenses. That gross margin is getting slimmer and slimmer in the last couple of years here. So, and finally, there's some farms I've seen, several years ago, used to have an annual debt repayment of about $75 an acre. Where now I've got some guys now upwards of 120 to $150 an acre in some cases, and that's just, I mean, the price of equipment, the price of land. A lot of farms are getting a little more leveraged as well. So that makes sense when profits are still high, but as profits have tightened, like I mentioned earlier, that there could be some potentially some debt servicing challenges or shortfalls here in the next little while. But that's kind of what I said earlier. That's where the working capital will help, hopefully help farms get through this and stay viable. So speaking of viable, thought I put together some best practices that to remain viable, and these are just strictly my from talking to my clients, kind of best practices and what I'm hearing. And so first one is, knowing your farm's financial position, whether that's, understanding your working capital, your gross margin, your profitability, your debt service ratio, your future cash flow. I mean, I get that, some of us, I'm a farmer as well, and I mean, some people tell me, Andrew, I don't like numbers, and that's okay. But get somebody then, get the help you need, get a consultant, have somebody do it for you, have a good bookkeeper, or have a get the help you need, because farming is a business, and like any other business, a business, but be it a farm or a non-farm, every business should know their where they're at, and that's also goes into the next point there. So knowing your cost of production, from what from conversations I've had over the last several months, some of my best clients can even point down now the technology out there that can almost figure out your cost of production on almost a per acre, or a per quarter basis, not even just per crop, but even from a per acre or from a per quarter per field. So, guys are really using the data to double down on their cost of production, and the more information, the better when it comes to making those decisions, be it what to grow, how to, when to sell, things like that. So the next point is knowing when you're profitable and making those grain marketing decisions. So kind of goes hand in hand with the knowing your numbers and knowing your cost of production. But yeah, knowing when you're profitable. So some of my guys are, canola's at $14 or $14.50 a bushel. They know that they'll pull the trigger on some, pre-sell some, if you will, and they know that they're profitable at that price. They're not going to sell all of their inventory or all of their projected inventory, but they'll sell a portion. And from what I've seen, that's kind of been some of the best practices out there in the last little while here. So point number 4 is to review your mitigation plan annually. So I mentioned off the top of this meeting here that we dive deep into the risk mitigation plan of all our clients. So whether that's understanding agri-stability, right, crop insurance, hail insurance, GARS, commodity hedging, which Tyler will get into a little later here as well. There's so many tools for the toolbox right now, from a risk mitigation plan. And every farm can be different, and I think it's important to sit down annually and figure out what the best plan for your farm is, and to basically, the more risk you can take off your plate, the better, right? So the next point there, thinking outside the box. I've had a few conversations in just the last couple of weeks here of some guys maybe looking at adjusting their crop plan. I mean, we're so close to seeding here. It's kind of hard when you've got the canola seed and ready to go and everything. But I've had a few guys that are looking at maybe they're seeding a few more pulses this year. I even had some guys, maybe not this year, but in future years, maybe they're going to look at totally diversifying into some livestock, or into maybe even some berries or blueberries or something like that. Like something completely not not seen before. But I think everyone's just looking, in case the markets drop out of canola and wheat and crops like that, then what's kind of the plan B or plan C here. So I'm hearing a bit of that for diversifying. And then secondly, exporting as well. I've had a few guys that are they're looking at, trying to cut out the middleman and go straight to the end user. And so whether that be in the US or beyond, internationally as well. But we're from an RBC lens, we have a lot of the capabilities to help clients with that. So we work with EDC on that, Export Development Canada, and but that was just I thought that was interesting that hearing some guys were looking to maybe do some exporting as well. So then finally, surrounding yourself with a team of experts. So I mean, whether it's your banker, your accountant, a consultant, your lawyer, your agronomist, everyone should have a really good team of experts around you, and having that strong relationship with them is key as we battle through what in some cases is a tougher time right now in the industry. So with that, the tariff situation, and I'm sure, like I said earlier, Tyler might touch on this here a little later, but I just thought I would kind of just give my take of what I'm hearing and seeing. So first of all, I guess, yeah, Canada, well, maybe I'll back up a little bit first.
Andrew?
Yeah.
Sorry to butt in there. Is your deck moving, or you?
Oh, sorry, you're not seeing the impact of the US and China? Okay. 1 second here.
Oh, now you're there.
Okay, sorry about that. Yeah. Okay, are you seeing impact of US and China tariffs?
Yes.
Yep.
Okay. Did you see the other slides just now, or?
I haven't seen anything. You were stuck on your first one.
Oh no. Oh, okay. You know what? Then sorry about that. I will I'll send it out to you, and then you can send it out as well. Sorry, so sorry. I've got a few slides I've been going through, so I'm sorry if you weren't seeing the slides.
Should be
You're
good
seeing
now.
one right now of impact of US and China tariffs?
Yes, sir.
Yeah.
Okay, thanks, Steve. Sorry about that. I did not realize you weren't seeing what I was seeing. So okay, yeah, no, so yeah, getting back to the tariffs there. So just earlier this week, RBC had an economic update, and it was focused strictly on agriculture. And so out of that, one comment I have several notes, but one note in particular was about how, just a few weeks ago, Canada was truly in the eye of the storm, of the US storm, if you will, when it came to tariffs. But in the last couple of weeks here, it's been kind of, China in particular, and other countries, Europe and Japan and countries like that have been also brought into the eye of the storm. And so, yes, Canada's been replaced by China, but it was also mentioned from our experts that, the US economy slowdown is not good for Canada. So, I mean, if we're not out the storm yet. Yes, we're not in the eye of the storm, but I guess indirectly we still are, because as the US economy slows down and they have less buying power, to buy our goods, well, that's not going to be good for us as well. So I'll let maybe Tyler touch on that here a little later in his presentation. But a few things that I'm just looking at in terms of focusing, or I guess a few pieces of advice from what I've gathered here is, focusing on what's in your control. So whether that's, controlling your production, your yields, you can focus on growing the best crop you can. You can try and control some costs to a point, but I know not all costs are controllable. But contracting your grain, when it's profitable, that's obviously in your control. So trying to filter out what's in control and what's not, and really just focusing on that. Understanding your future cash flow, working with your banker. I've had a few conversations with guys that are, maybe getting into some cash flow issues here, or potential issues in the months ahead or year ahead. So having that conversation early to see what possible solutions are out there. I mean, whether it means a restructure is required or what, but having that close relationship with your banker is key. Understanding the carrying costs of inventory. So recently I've heard a few guys saying that they're looking at with what's going on with prices right now. They're planning to carry maybe some wheat through until summer, or maybe even some canola as well. So, but however, if you're into your line of credit or your credit line with that, what is the cost for doing that, right? I mean, interest rates have come down from where they were, but there's still a cost to that. So understanding that in regards to marketing your grain. And then one tidbit of one kind of interesting fact I heard on a recent webinar I was on is where I heard a majority of farm wealth is earned in only 5 years of an average farming career. So let's just say your average farming career is, 40 or 50 years or whatever. I guess, when you're looking back in history, the majority of the wealth created is earned in only 5 of those years. And I kind of look back in some clients, I look back at their kind of 10-year averages, and I was like, yeah, that kind of makes sense. It's kind of 1, maybe 2 years out of 10 that were bumper years, and that's where a lot of the wealth was created. So I thought that was kind of interesting. But I mean, with that, I said it earlier, but don't lose focus on producing the best crop, and marketing for the best price. Sometimes there's a lot of noise around right now, but just focusing, especially this time of year, we're going into seeding, so let's just try to grow the best crop we can, right? And then finally, don't stress alone. So, speaking with your support team or even Ag Talk, and I'll just make sure you guys can see what I'm seeing here. But so Ag Talk is, can you see the Ag Talk slide, Dean? Or
Yep.
okay, so Ag Talk is a sponsored by RBC, BASF, and the McCain Foundation, and it's by the Do More Agriculture Foundation. So basically, it's a mental health community for anybody related to agriculture. So whether you're a farmer or whether you work with farmers, basically, if you're going through a bit of a tough time and you're stressed out and you just need someone to talk to, this is where you can. So you can kind of take a picture of that QR code or whatever, or you can go to the website and you can find the support you need. So again, I do apologize that you weren't seeing my slides. I really feel kind of silly now, but I do apologize. But I will send out the deck, and if there's any questions, you can let me know. But I'll mute myself in a bit. But maybe after Tyler's presentation, we can ask questions then if that works. So
We can just yes, no? Okay, thanks, Andrew. So real quick, thank you very much for that. I'd like to get things in this category addressed first. That would be, you're correct, Andrew, in that I had a very good friend of mine he's passed away now, but he built his farm on 4 crops, starting in 50 something, and then on the way he just named them, and that's when the stars aligned and all the rest of it. So being aware of those opportunities and knowing when to squirrel the cash away and not overdo it is really a key. In terms of, do you guys have a vibe or a scorecard in terms of the overall health of the broadacre farms or primary agricultural farms in Canada now? That's one thing. The second thing would be relating to your forecasting. Where do you see the interest rates going? Like, what have you being indicated on that? That would be the second thing. And then the third thing, if you have any sense of that, would be, what are you seeing with land valuations trading? I know you've got a microcosm in your specific zone and things like that, but are you seeing similar activity year over year with land moving ownership?
for sure, and everyone can still hear me okay. So yeah, maybe I'll touch on your second point first, if that's okay. So just with interest rates, I mean, that's changing all the time with the current situation with tariffs, and like I said, Tyler might be able to provide more information on that. But Bank of Canada came out yesterday and did not lower the interest rate, the Bank of Canada rate. We had predicted, I guess a few weeks ago, we were predicting it would drop another 0.25%, and then as we led up to yesterday, that changed and stuff. So I think the forecast is for rates still continue to drop throughout 2025 here and into 26. But I mean, for how long they'll remain low, we really don't know. So conversations I'm having with clients, whether their loans are renewing or whether they're looking at new borrowing right now, some guys are still doing the 1 year thing just to try and get the lowest rate, because the 1 year and 2 year money is still your cheapest. But I've also got some guys that are locking in for 4 or 5 years right now, just because Could it go higher? Yes. Will it go much lower? Maybe not. And our fixed rates are always kind of looking ahead. So, they're always kind of live, I guess is what I'm trying to say. So, I mean, they're up and down all the time. But yeah, hard to say where the rates are going. But I mean, they've definitely come down from where they were. And so it's making it, as I mentioned earlier, it's making it better to more feasible to actually finance some upgrades and land purchases versus using some cash. But and going maybe into your third point, land values. And I mean, I can only speak to my little area here, but yeah, it's continued to keep going up. And even rent. I think one thing, yes, the land price has been going up, but rent has really like doubled in many cases. And I don't know if that's just a catch up from the last few years, or if that's just timing wise, and maybe some rental contracts have been renewing. But yeah, it's in some cases it's doubled, which is again, when you go to my point earlier about gross margin, I mean that, or in terms of profitability, that just comes right off there, and it's going to makes it less profitable too. So definitely, again, knowing your numbers and knowing, does this still make sense? Does it make sense to pay that high rent, or does it make sense to pay that price to buy the land? Land price, I mean, I still like buying land. I mean, yes, it's expensive, but it's a long-term asset, and if you put it over, 20, 25 years kind of thing, it still makes sense, especially with appreciation in land. But yeah, it's been interesting times, that's for sure. But and then, to your point, your first point, Dean, about, kind of from a maybe you can just maybe I've forgotten the question already. You mentioned about kind of a overview of maybe some trends, or sorry, the where I think things are going. Was that your question? Was it?
Yeah, and just
Yeah, so yeah, I think a few points. I mean, I mentioned working capital, I mentioned profitability. I think leverage, I didn't mention that, but leverage, a lot of farmers are now, with the price of land, they're getting fairly highly leveraged, and yeah, it's comes to a point, like I think this is a key year, at least in this area. I think this year, 2025, I mean, if grain prices remain where they are, I think we'll be okay. But if they were to drop further, I think we could be in a position where maybe land prices do potentially hold off, because I think I go down to, I look at it from a competition standpoint. If you've got a lot of competition for land, that just makes the price go higher, right? Whereas all of a sudden, if there's some guys out there that can't afford to buy that land going forward, well, then that's going to decrease the competition and potentially, not saying land price will come down, but I think that may level things off a little bit. So, I think the gist of it is being proactive. Like, I've got clients giving me a year or more heads up that they're buying land, and that helps me out, because then as a banker, I can then focus on that and help them, whether it's, planning out their cash flow, planning out their debt service ratio for the year ahead, like making sure we have the ability to finance, give them the financing they need, is the key. So yeah, being proactive is definitely a key for going forward as well. So.
great. Well, thank you very much for that. And what we'll do is I'm going to stop recording quickly, just so we kind of have things in two pieces, and then we'll switch gears.